Hi everyone, welcome back. First off, wishes to everyone a very successful 2025. I want to make this video so that we get a great head start. Do you feel like 2024 flew by, but your wallet didn't get the memo? Well, you're not alone. This year was one of the most unpredictable in recent history, where every financial event hit us straight in the bank account. From inflation waves to crypto crashes, banking scares to AI taking over industries, every single month carried a crucial moment that shaped our money. And if you missed it, your wallet probably felt it. But here's the good news. I've got all the details you need to not only understand what happened, but also what you can do right now to protect and grow your money in 2025. Trust me, you'll want to stick around because each event we're about to discuss has had a huge impact on your personal finances. Let's dive in. January kicked off with some hope. Inflation finally started easing after the chaos of 2023, and central banks around the world were cautiously optimistic. The Federal Reserve hinted at rate cuts for later in the year, while Europe remained on edge due to rising energy costs. At the same time, India became the fastest-growing major economy, shifting global market dynamics. That should have been your cue to start thinking about growth markets. With inflation slowing down, it gave us all a chance to breathe, but we had to be patient and not rush into risky investments. If you focused on reworking your budget here, smart move. In February, the big news was all about US-China trade relations. Tensions cooled as tariff discussions took a positive turn, while China's reopening after years of strict COVID measures boosted global trade. Meanwhile, oil prices stayed unpredictable, with OPEC cutting production keeping gas prices on edge. But for a brief moment, we saw some relief at the pumps. If you started seeing a bit of extra cash in your energy budget, great. But it was also a sign to save, knowing that volatility was far from over. Did you stash away that extra money? If not, that was the perfect opportunity to build your emergency fund. March gave us all a scare when Deutsche Bank faced a liquidity crisis, sending shockwaves through the global banking system. While central banks managed to prevent a full-blown crisis, it reminded us just how fragile our financial system can be. If your emergency fund wasn't strong before March, this was a wake-up call. Having cash reserves and diversifying where you keep your money became essential. By June, climate change was front and center, with heat waves, hurricanes, and storms affecting South Asia, the Caribbean, and Australia. These natural disasters didn't just destroy infrastructure. They sent food prices soaring globally, and commodities became more expensive. Remember, events like these can hit your finances in unexpected ways. Having an emergency fund and insurance to protect against disaster disruptions became even more crucial. September came with a major correction in the crypto market. Bitcoin lost nearly 40% of its value after governments cracked down on digital currencies. For those who thought the crypto bull run would last forever, this was a harsh reality check. Overexposing yourself to one type of investment, especially something as volatile as crypto, is risky business. This was the time to remember the golden rule: diversify. Mix your speculative assets with more stable investments. October wasn't easy, especially for the job market. Major tech companies announced mass layoffs, while AI reshaped industries faster than we thought possible. For many workers, job security was thrown into question. If this wasn't the year you focused on upgrading your skills, it should have been. The future of work is shifting fast, and staying adaptable, learning new skills, or getting tech-savvy has never been more critical. November brought conversations about global inequality to the forefront. Protests erupted around the world, and governments started addressing rising debt in low-income countries. There was a growing concern that wealth inequality would continue to rise unless real changes were made. While governments may start introducing new tax policies, it's important for you to keep an eye on how that might affect your investments and savings. Higher taxes for higher earners could mean you'll need to rethink where your money goes. As we wrapped up the year, December gave us a sign of what's to come in 2025. Central banks signaled that they're ready to cut rates further to stimulate the economy. While that's great news for borrowers, savers have to reconsider how they're allocating money because savings account interest rates are likely to drop even more. With borrowing set to get cheaper, it's a good time to think about consolidating high-interest debt, but also start looking for investment opportunities that outpace inflation. You want your money working for you, not sitting in low-yield savings. 2024 threw a lot at us, whether it was global market shifts, climate events, or job insecurity. But the biggest lesson? We need to stay adaptable. Building financial resilience by saving smart, investing wisely, and staying ready for the unexpected is more important now than ever. So, take a moment, review your finances, and make sure you're ready for whatever 2025 has in store. What will you do to protect your money next year? Let me know in the comments, and if you want to stay one step ahead of the financial curve, make sure to subscribe for more tips. It's not all negative though for 2024. Let me know in comments or simply hit the like button. It will really help motivate me to make more videos for you. Thanks for watching and see you next time.